All right. Good morning, traders. Can you guys hear me okay? Happy Monday to you. Hey, Charles. S- Small group again. I wonder if people are still at. We've had a whole week of daylight saving thing. Maybe people still aren't getting it. But welcome back to Monday morning, our live Q&A session for the 12-week transformation. Not sure how many of you guys are still left in it. We had a big graduating class a few weeks ago, and then a few more have settled out. But we're here. It's Monday. We're here to do training, so that's what we'll do. I had a few things I want to discuss, and of course, I'll go on to answer whatever questions you guys may have. The first thing I want to discuss is just a little bit about routine. I've been reading. You guys know I've been away for a little bit. Just got back in early this morning from Alabama and Atlanta, and I had a chance to break open the One Good Trade book, which so far is a fantastic read. It's it's probably going to end up, if it can keep up the momentum, it's probably going to be up there, one of my favorite books to read. But chapters I was reading about was about they were talking about the interview process and the prop firm and how they go about finding candidates. And for some reason, it made me think about trading routine. I'm not sure if I discussed that with this particular group, and I always talk about how I don't really spend too much time in the market. And there's a myth out there that, and some traders do this, but there's a myth out there that you need to be in front of your computer. In order to be a successful trader, you need to be in front of your computer 8 to 10 hours a day just staring at charts. And that's not the case. I often tell you guys, hey, I stare at my charts really just a few hours a day, maybe 3, 4, 5 hours a day at most. And you don't need to be actively in the market that much, especially if you're a swing trader. But something you do really need to work on is the routine. And most of the work that I do in trading really comes before my trading day. The majority of my work comes in setting my trading day up. And I remember this old spreadsheet we had during, I think I added this to the 12-week transformation. If not, just let me know. But there's an old checklist we had when we had one of our mastermind meetings in Kansas City a few years ago, of really just a pre-market checklist of everything you should be doing, and kind of a way to organize yourself before the trading day starts. And again, the majority of the work should come in your pre-market analysis / your post-market analysis. And then really during your trading day, all you're doing is, well, you're waiting to see if your ideas or if price action is getting to the level of your ideas or not, and you're looking to take action. And we all know that take action really should be the easiest part of trading, because why? Well, we're not just randomly trading stuff. We're not going off of emotions. We have a plan. So if we already know at what price point we're looking for, what type of setup we're looking for, if we already have a tried and true trading plan that we've created, well, it's really just going through that if-then thought process. If price action reaches here, then I'll take the trade. If price action does this, then I need to wait for that. Now, how many of you guys would say that you have a consistent routine in your everyday trading? Yes or no? What would you say to that? Yes, 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 no. Well, if not, it's worth, and again, I believe you guys have this. If not, it's worth printing out either something exactly like this or creating something and writing down your routine and trading plan. Um, for example, the first thing I do, obviously, is wake up. Is I don't go right into trading. The first thing I do when I wake up is I try to, I wake up and then I really wake up. So I don't wake up and get straight to trading. I wake up and give my mind about 20 minutes to actually wake up. But the first thing I do is check current positions. So you can have this written on here from the night before. You can have it during the morning. But when the first thing I do is check current positions. What am I in? Euro, dollar. Am I long? Am I short? Am I up? Am I down? What's the current status of it? What's the strategy? I want to know exactly what I'm in. That way I know what I need to pay attention to. I know if it's a trade I need to manage or not. And you can have another section next to it too that says, hey, I need to manage it. For example, if it's a pattern-based trade, maybe you don't manage pattern-based trades. So by having that pattern, you know that, well, I'm just going to sit and hold it until it hits profits or it gets stopped out. Maybe for your pound dollar trade underneath it, this is a structure-based trade, double bottom or CTS trade. And you know that for CTS trades, you actively manage it. So by having that and being alert to what you're in, you know that you may need to pay attention to this second trade more than this first one. And it seems simple. You would say that, well, how do you forget what trade you're in? But trust me, if you do enough trading, you sometimes forget that you're in a position. There's been plenty of times where I've had swing longer term trades on that I just forgot about. I've been in Aussie dollar trade maybe for a week, and because it's not really doing much, because it's one of those set it and forget it trades, I kind of enter it, I put it to the side, and I focus on the task at hand for today. And if nothing's moving for a week, by the time Friday comes, I may forget all about that trade and then go over and be like, oh man, we hit targets. I didn't move stops to break even. So you want to have a constant reminder of what you're in, and of course, any notes down here. Now, after I do that, after I wake up, after I kind of check my current positions, manage what I have to manage, see if anything got filled overnight. I always want to get some food in my system. That's also important. But we also want to see what's on the agenda for today as far as news-wise. Are there any news events out that are going to affect the market? Let me head over to, I guess I can put our syndicate thing up. Let me head over to Forex Factor right now. So, for example, today, what do we have on the news agenda today? We've got, Monday's a bad example. Let's go to Tuesday. Usually there's not much out Monday. So Tuesday, we've got dollar CAD manufacturing sales. We've got U.S. dollar building permits, dollar housing starts. That's all that's going to come in our day. Maybe if you're trading the London session, you've got this Euro news as well. What you want to do is you want to track that. So you want to write that down. And what I would do is kind of, we don't trade off of news, but you want to be aware. So especially if it's a red box news event, if it's a news event that may move the market, it may not affect your trading at all. It may not, you still may have to take the trade if it happens. But at least you want to be aware of it so you can kind of prepare yourself as 8:30 comes around or as 9 o'clock comes around, whatever time the news event is, you know that, hey, I may need to be actively involved in the market. I can't be running around washing clothes or on the phone, grabbing coffee, watching a movie. When 8:30 comes or 8:29 comes, I need to be in front of my computer just in case something crazy happens. Now, 9 times out of 10, it won't, but just in case, you don't want to get bit by that one time where the market rallies, it spikes past your limit orders but doesn't get filled and you need to exit that market, or maybe your stops don't get filled right away and it's bouncing back and forth and you need to exit that market, or maybe we do a sharp spike, we hit your target one and the market rushes back down and you got to rush to get targets back to break even. You want to be aware so you can manage these trades based on these events. And again, we don't try to, experience is what's going to tell you what news events are going to consistently move the market and which ones aren't. And you'll kind of get a feel for it. If you're trading on a regular basis, every day, every week, the news events really don't change too much. They kind of develop a routine. We know when housing numbers come out. We know when unemployment comes out. And we start to realize, hey, this news event typically moves the market, whereas this, housing starts for U.S., doesn't really do much. But we want to write that down just so we're prepared. And then after that is, of course, the bulk of our trading, where as we do our pre-market analysis, we're writing down ideas for the day. So if we're looking at euro dollar, say we're saying, hey, euro dollar is pushing towards a potential structure level. So you're looking at euro dollar CTS trade. So you go through your checklist, you see that if the euro pushes up, we've got an ABCD pattern, structure looking left, Fibonacci confluence. So we're looking for a potential CTS trade. So we have the pair here. We have the trading strategy here. Next, we want to know what price point are we looking at? Well, I'm looking at a potential CTS trade if price action comes to X, Y, and Z. And then, of course, on the side, any notes you may have, wait for double bottom, only trade if RSI goes overbought, or be aware of 8:30 news event. But the key is we want to have everything prepped out. We want to have everything planned ahead of time. That way, it's a lot easier to enter. The worst thing we can do is catch something by surprise and then go into panic mode. We see something last minute. Oh, that looks good. But I don't want to miss it. And then we buy it or sell it before we plan it out. If you plan out everything in advance, it adds a lot more confidence to your trading. You're already saying, okay, well, we know the euro's on my waiting list. I'm looking for a CTS trade. All right, if I get this, then I'm ready to enter, and then boom, you're involved in the trade. So again, having that routine is very crucial. And the same thing goes for post-market analysis. I just want to use this as an example of the pre-market analysis and setting up your day. But the same thing can go for post-market analysis. After your trading day is over, again, start re-recording what trades have you taken. Obviously, you want to do your journaling, but also setting yourself up for the next day. I typically do another analysis session in the evening. I do another analysis session usually at night around 6, 7 o'clock for the euro session. Now I don't trade the euro session or London session, obviously, but I want to set up my day so I know what to keep an eye out for on the open. So I'll write up, okay, Aussie dollar, Gartley pattern setting up. We're not there, but that is something I could take a look at tomorrow. And it's just good. The more organized you are, guys, the better. So I did want to touch on that. That was on my mind. Any questions about trading routine or this type of trading checklist? Again, you don't have to use this one. You can easily set up one of your own in your journal on a piece of paper. But any questions about setting up a trading routine, kind of that pre-market analysis, and really doing all the hard work beforehand, doing all the prep work? That's the majority of the job. If you can put a lot of energy and effort into your prep, trading is actually pretty darn easy. There aren't, again, aside from a random big rally or spike, there's not too many surprises out there. The key is we just need to be more prepared than anyone else. It's like, for you guys that are football fans, it's like the coach it's like this, is like the best quarterbacks in the league are who? Peyton Manning and Tom Brady. What do they do better than everyone else? Well, they prepare. They watch hours and hours and hours of film. They watch hours and hours of film. So by the time the game comes, everything slows down. They're never caught off guard, or they're rarely caught off. And he says, my issue is that I have plenty of time and I feel like I want to over trade. Over trading. That's a tough one. You feel like you need action, right, Danny? You feel like you need action. You need to be involved in the market. Let me ask you this: what is your what are your trading hours? What are your trading hours? When are I always wrote the same thing. When are you allowed to trade? When are you supposed to be trading? All right, so you got a 4-hour period, 4 to 8 your time. Is that straight through, or are you allowed like a lunch break or anything like that? Or I guess a dinner break, some type of food break. Here is the key to overtrading, to not overtrading, I should say. Here's the key to not overtrading. A, having a specific plan of what you're allowed to trade. Because if you limit yourself, if you're only allowed to trade Gartley patterns, then it's easy. You know, it's going to be very hard to overtrade because you can only trade one thing. So you want to make sure you specifically establish what you're able to trade. Can I trade Gartleys? Can I trade BATs? Can I trade CTS? And my advice is at first, don't try to trade everything. Pick a few things and master those things first. I'd much rather see you guys master trading two strategies than try to trade 7 strategies and not be good at any of them because you're just wasting money. So if you haven't mastered your main strategy, there should be no reason to go on to the next one. So have a specific plan of what you're allowed to trade, and then also be very specific with your trading portfolio. How many pairs am I allowed to trade? I can only trade these 6 pairs. And that's going to help with overtrading because there's only going to be so many opportunities that meet the strategies you're allowed to trade on the pairs you're allowed to trade them on. So you want to limit your trading strategies, you want to limit your trading portfolio, and you also want to limit your trading time frame. You should not be a trader that says, well, I'm allowed to trade from the weekly chart all the way to the 1-minute chart. No, be very specific. What time frame do you execute trades on? Do you execute them on the 60? Do you execute them on the 5? If you're very specific in what you're allowed to do, it's going to stop you from overtrading. Because overtrading comes from, again, it comes from that feel that we need to have action. However, if we have a plan and specific rules on what we can and can't do, there's only so much action we can get just based on there's only so many trades that will meet our rules. I mean, I don't know about you guys. I trade a lot of strategies on a lot of pairs, and I still only get so many trades a day because there's only a handful that meet my rules. And typically when people are over trading, they're getting sucked into emotional trades where, again, they feel like they deserve to have action. They need to trade to justify themselves. So they start looking for opportunities that aren't really opportunities. You start looking for double tops that are just double. I'm a double top trader. I'm allowed to trade double tops, and this is a double top. There's nothing else there CTS-wise. There's no structure. There's no Fibonacci, but, you know, I need some action, so let's take it. That's when you start getting in trouble. What I would say is if you feel like you need some energy, you feel like you need to, or some action, I should say, if you feel like you need to do something, do some back testing. If you get bored, spend that time back testing. There should be plenty of hours of back testing needed. If you get bored in the markets, if it's a boring day, do some back testing. You can never do enough back testing, right? Back testing never gets old. When I say overtrade, I don't mean take trades just because. I mean, I watch all the charts all day, like every 2 hours, to check if there's opportunity. Oh, so you're constantly in the market. Well, it's if you've dedicated your 4 to 8 time, that's fine. That's only 4 hours. That's not too much. Are you saying that you're every 2 hours, even out of that trading time frame or those trading hours, you're still watching charts? Yeah. Oh, we'll just stop doing it. That's simple. Just stop. There's no need to. If you're a swing trader, you're gonna know exactly what you're looking for in advance. And again, if you have this checklist, if you're a swing trader, if you're looking at Aussie Canada potential Gartley, you know Aussie Canada potential Gartley is coming. You should have limit orders set there already. If you're constantly looking at the markets, you're looking for structure-based trades, it's out of your trading hours. You shouldn't be looking for them anyway. Right? Would you go into work after your hours are done? Right? If your job lets you off at 5 o'clock, would you go back in at 7? No. Once your trading hours are done, Let them be done. There's no need to check every 2 hours. There's not much is going to happen in 2 hours. And you don't want to be actively day trading outside of your hours because there's no consistency in that. You chose your hours for a reason. There's no reason to be actively day trading out of the hours you chose. You're not going to catch every opportunity. So just don't do it. Once 8 o'clock comes, say, look, closing the charts up. I'll do whatever prep I need to do for my higher time frame trading, for my swing trading. But as far as the intraday stuff, closing the charts up, not looking at it. Go watch a movie. Go to the gym. There are times I don't trade at all. That is something I overcame since beginning trading, of course. I need to overcome. Yeah. Yeah. I mean, you just, it's a common thing that traders do. You want to catch every move. You don't want to miss anything. That's the biggest fear. I don't want to miss the move. Especially if it's intraday. I don't want to miss the move. But you just got to realize that there are always going to be moves. There will always be trading opportunities. Our job is not to catch every single one. If we try to catch every single one, we're going to end up losing more money than we make. So the job is not to catch every single one. The job is to take advantage of what comes during our time frame or during our trading hours. So you just gotta, when your hours are done, shut down the computer. There's really no need to look at charts. There's no benefit. There's no added benefit in staring at charts all day. There's no added benefit. If anything, there's added risk. So just be disciplined. 8 o'clock comes, boom, shutting them down, shutting them off. No longer day trade. Do some back testing. Review your trading day. If you want to look at charts, review your trading day. 8 o'clock comes, you go back to your chart, your 4 hours, tick by tick. See if there's anything you missed. See if there's any trade that you entered that you shouldn't have entered. Did you make any mistakes? See if there's any way you could have, gotten in at a better point. Could I have used a better entry to get into the trade I took today? Could I have used a better exit? Could I have managed the stops better? If you want to stare at charts, do the work. There's nothing wrong with that. But don't staring at charts will do nothing for you. Do the work, do the back testing, do the review. That's stuff that's going to make you better. That's the stuff that's going to turn you into Peyton Manning. Do the film review. Grade yourself. How was my trading day today? And you can kill an hour or so doing that. Do some back testing. Do stuff that's going to make you better for the next day. But you need that break. It's very crucial you have that break. People burn out because they look at charts all the time, and that's with anything. If you love hamburgers and you eat hamburgers every day, every meal of every day for a week, you're probably going to get sick of hamburgers. You don't want to burn out of trading. Because as soon as you burn out of trading, as soon as you're looking at charts every single hour, you start to lose focus with them. You start to lose that passion a little bit. You're just like, whatever, looking at charts. I know for me, I get excited every morning to wake up and look for charts because I don't really see them after my prep. After my 7 o'clock prep, I get what? 7, 8, 9, 9, 10, 11, 11, 12. I get a good 11 hours, 12 hours that I don't look at charts. So I'm excited. What happened in those 12 hours? I haven't really looked at a chart all week since last Wednesday. So I'm excited. I think that time away from the market makes you even more passionate about seeing them. And the more passionate you are, just the clearer you start seeing things. It doesn't start to all jumble together. So, but yeah, the key is just shut it down. Just as you're strict and consistent in your trading rules, be that same way with your routine. I think you'll be surprised the more time that you stay away from the market, the clearer those charts are going to look for you. Now, the second question I got, I see Danny's still typing, so. Yep. No, yeah. Yeah. I would definitely stop. Yeah. Second question I had today was, I had a question about ATR stops. And I'm going to answer this question because, again, if I can find an example of a pattern that works. But I told the trader I would. That's weird. All right. Funny stuff happening with my charts here. But essentially with ATR stops, here's what we're looking at. Here's a good example, and this one's a busted pattern, but you can use it as an example anyway. Actually, let's see if we can use one that actually works. All right, so here's an example of a cipher pattern right here. Aussie dollar, 15-minute, looks like it formed yesterday. Looking at X to A, A to B, B to C, C to D right up here. And the trader was asking about how to use ATR stops, and here's how we do it. Again, you want to take the ATR from your D leg, from your D completion. So your ATR should be taken from this leg, wrong thing. Your ATR should be taken from this leg right here. This leg right here. So when I put my little clicker deal over it, my ATR is going to be 9. Now, with the trader, the mistake I think the trader was doing, they were taking that ATR and they were adding it to the D leg. We don't want to add it to the D leg because we don't know where the D leg is going to complete at. So we can't really do. Because what will happen is we'll just keep adjusting it. We see a lot of traders do this with butterflies. We want to take the ATR of this leg right here. We want to find our highest point of the pattern, which is our X leg in this case. And we want to use the ATR above this X leg. So the X leg right here is 76.68. We want to get at least 9 pips. That would be 1 ATR. We want to get at least 9 pips above that, which would be 76.77. So again, we take the ATR from our D leg, but then we add it to our X leg, and that's how we use the ATR stops. And hopefully, again, trader's not in the room, but I told him I'd talk about it so he can see it on the recording. But did want to touch on that on ATR stops. What other questions do you guys have for me for today? Anything else? We went over trading routines, setting up your pre-market checklist. We talked about not over trading and having a routine of when to look at charts. We talked about ATR stops. What are a lot of you guys towards the end of your transformation sessions? Are a lot of you guys towards getting closer to those 12 weeks? Just curious. Usually the question starts slowing down as you progress through the course. Typically, because I know, yeah, Vern's new. I typically pound people in the head about the same thing every day in the live room. So, which is why I love the live room. I know Vern's new. Danny's 8 weeks in. So Dan, you're done the bulk of the stuff. It's all psychology now and the little stuff. You've done a lot of the technical. Mm-hmm. Central bat. Nothing else. What there's. There we go. Trail stops. I have a question. Let's say I take a trade on the 240 time frame and I want to protect capital. Can I base it on a lower time frame to do that? Yes. What I would typically do is this: if you're going to trail stops, go as much as one time frame down to trail stops. So if you're looking at entering a trade here, now always be warned that whenever you go down a lower time frame, there's a lot more chop. There's a lot more choppy movement. So the chances of you being stopped out are greater. But remember, there's always a give and take. Yes, you can trail more aggressively on a lower time frame, but the chances are the chances are greater that you're going to get stopped out. So let's say you enter a move right here. You enter long right here at these highs, or enter short, right here at these highs. And as the market moves, you're looking to trail stops on your lower time frame. So your lower time frame will be the 60. That's the next time frame down from the 4-hour chart. So let's just see how this would go. You enter right here, and again, you trail stops based on structure. So the market goes down, 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 down. We retrace, lower low, lower close, right down here. Now you would trail stops down below previous structure high, right around here, based on a lower time frame. And then again, as the market continues, you would probably trail stops right around here. So price action would do this, boom, retrace, lower low, lower close. Trail stops would go right above these structure highs. And you can see you may be stopped out right here. And then the market, let's see what the market does. Market continues lower, but you're out of the move. So if you were trading here on a lower time frame, a 60-minute, you would have been stopped out right at this gold mark. If you were trailing on a 4-hour, let's see what happens here. If you were trailing on a 4-hour, your initial trail stops would have been like this. Right down here. And then the market would have done this. Bang, bang. Right up here. Outside return. Swing low. Probably would have been stopped out somewhere right in here. So you can see the difference. Trailing on a lower time frame would have caused you to miss about 125 pips on this move because you're trailing more aggressively. So you see how there's a give and a take to it, guys? Yeah, so it's your decision on how aggressive you want to be. Now, on the other hand, price action easily could have done this. Price action could have reversed all the way up, and if price action would have done something like this, guess what? Your 4-hour trail stop would have been up here. So, it's a give and a take to both. There's going to be less choppiness on the 4-hour than the hourly, but you can be a little more aggressive trailing on the hourly than the 4-hour. But whenever there's more choppiness, there's a bigger chance of you getting stopped out. So it's there's no wrong or right answer. It's personal preference. How aggressive do you want to be in trailing your stops? But you just got to be willing to deal with stuff like this. You got to be willing to see the market continue down and be like, ah, oh, man, that, you got to be willing to stick to that game plan after the market does something like that. But I'm also in favor. I'm always in favor of having an ultimate stopping point as well. So I've never been a fan of just holding on to a trade forever. Always have some type of end game. It could be 300 pips away, but always have some type of end game where you're looking to take a final profit at. Because again, our goal is not to catch the entire move. We don't want to catch the whole move. We just want a piece of the pie. We want a consistent piece of the pie that we can eat. We're not in here for the whole thing, to ride these things out for the ultimate high to the ultimate low. No, that would be silly to think that. We just want a piece. We want to get our piece. We want to get out. We want to move on to next. Clear capital for the next opportunity. Good question, though. And for you guys that are new, this is why it's important to understand the first module. Reading structure, higher high, higher closes, those principles. If you don't know that, you're not going to be able to trail stops at all because you won't know where the proper point is. So don't jet past. Don't just rush past that first area. Oh yeah, I know how to read structure. Whatever. It comes in handy later on as you start to refine your trading strategy. It comes in handy. So, I say it, people will still do it, but hey, I can't make the trading decisions for you. I can just lead you down the right path. So yeah, good question. Anything else? I'm excited to look at the markets today. I got to reload my charts. My Ninja's acting. Whenever I leave for a long time, my Ninja acts up. It's like if I have my computer shut down for more than like 3 days, it gets angry at me for some reason. So I have to reload these charts and say some nice things to it. But I will see you guys tomorrow in the live room. Looking back to getting in trading. If I see anything on my radar tonight, I'll either shoot it through the trade floor or I'll record a syndicate video for you. But good Monday session, good way to start off the week. And until next time, plan your trade your plan. Have a great day. Don't overtrade. All right, I'll see you guys tomorrow. Take care.